Hi there, this is Pat Strubbe, the founder of Preservation Specialists, coming to you with our September commentary for you today. Well, unless you've been under a rock, you know that interest rates are going up, and the markets are going down most of the time. It's been a crazy year, and I actually wanted to start by sharing something that I read from an author named Jason Zweig, who's a Wall Street Journal writer who talks about investing quite often. He mentioned recently this isn't a bear market, it's two bear markets. One is menacing young investors who are still in their saving years. The other is mauling those who are in or near retirement. For people still in their prime earning years, this bear market is likely to be bullish in the long run, as it is painful in the short run. For older investors, the decline is potentially devastating. He goes on to add, during a bear market, it's vital to spend less. Funding your lifestyle by selling assets that have fallen in price is painful. And boy, did that really speak to me, really hits on items that we deal with every day here at Preservation Specialists. So I wanted to break down what he was talking about and kind of our view of that. I always want to go back to, if you remember, the 3 stages of your investing lifetime that I cover in my book, The Retirement Secret. Going from youngest to oldest, the first one is when you have decades before retirement. Most of us are basically always saving for retirement, having that financial freedom. So we start there. The number one rule in the first stage of retirement, especially when the markets are the way they are, is putting on blinders. If you are 30 years from retirement and your account goes down 10%, by the time you retire, that's going to mean nothing. So we really want you focused on the long haul. There could be little benefits to you if you're putting money in, like through a 401k. Those contributions could be actually buying in at lower prices down the road. I know it's not fun, but that's the important news to know. Now, as you get in that second stage of investing, that's when you're transitioning from the long-term investor and you're getting closer to retirement. So for most people, we'd say it's within 5 to 10 years of retirement. This is a really important time, and what we would strongly suggest right now is we want you looking at, do you think your nest egg is divvied up appropriately for this stage in life? You're no longer young and investing for 20 or 30 years from now. Have you started to divvy that up, or is that a little overdue? This could be a little bit of a wake-up call or an opportunity for you to kind of take a view of that. And if you're not sure, that's an ideal time to talk to someone like one of our advisors. Now, if you're already retired, how do you feel when someone says something like, during a down market, you need to spend less? I've got a hunch that you don't like it. And why do I know this? Is because I've been working with retirees for over 25 years, and I don't think anyone wants to hear that. So of course the question is there a solution? And that's where we always preach, divvy up your nest egg. Don't put everything in one place. Don't put it all in the stock market. Now, one of the questions we get all the time is, how much money should I have in the stock market in retirement? And of course, we talk about having a custom-built retirement, and everyone's different. Everyone has different needs. Everyone has different comfort level with the market. I would say most of the people we work with end up anywhere from maybe 10% to maybe 30 or 40% in something that's more growth related. Of course, that depends on everything about you. But what we want to have happen is we do not want to be depending on money in the stock market for today's income, because you never know when the market's going to drop like it has this year. And so our goal is to never tell you have to spend less in retirement. We want you to have that steady ability to count on that income. Now, in closing, if drops in the market like we've had this year are causing you a lot of stress, it's our opinion you may not have your nest egg divvied up properly for your stage in life. We want to help you reduce your stress and anxiety and help you have as much peace of mind heading into and throughout your retirement. If you need any help, don't hesitate to reach out for us. That's what we're here for.